Hello, Dan.
Hello, Trevor. Can you hear me?
I can hear you fine.
Excellent. 1 second, please. I'll just make you the presenter. Yeah, I can hear and see you in that fantastic tweed outfit. There we go. Yes, I should have made you presenter, so I should be able. Yeah, I can see your screen.
Okay.
I can see you, Swiss USD, Swiss franc. Okay. Yes.
But let's start with the euro.
Okay. I can see.
Right.
I can.
Okay.
I'm
all ready.
You're ready to go. Okay, it's 5 o'clock. I think we can get started. Okay, so hello everyone and welcome. Thank you for joining what will be our last technical analysis webinar of 2020. We'll be taking a 2-week break and restarting after New Year on the 4th of January. We also want to let you know that we will be starting at 9 a.m. London time after the New Year, which is 1 p.m. in Dubai and 8 p.m. in Sydney. So please don't forget that we'll be starting much earlier in the morning. As always, we'll aim to take up no more than 30 minutes of your valuable time. And if you do have any questions for Trevor, please remember to ask them in the questions tab of your GoToWebinar window, although I'm sure you already know how to do that by now. You can also download the handout from the handouts tab, which is also in the GoToWebinar window. So if you're having any problems locating it or downloading it, please let me know in the questions tab and I'll send you a link. If you're new to trading, we strongly recommend you use the handout as it will help you understand the different indicators that Trevor uses, and it'll also help you understand what he's thinking about when he's using them. I'm sure you all know Trevor by now, but I'll give a brief intro for those of you who don't. Trevor is a veteran technical analyst and trader. He was global head of technical analysis at Bloomberg and also a founding member of the Society of Technical Analysts in London, which is an institution that accredits technical analysts. So without further ado, I think we can get started. Trevor, over to you.
Okay, thank you very much indeed. Welcome everybody. Thank you very much for joining us today. As Dan said, please ask any questions. Please direct them to Dan, not to me, because I can't see the chat while I'm talking, and he will interrupt me at the appropriate times. But I welcome questions, and I'll be delighted if you have any comments or questions.
Trevor, okay. we have on straight away, Trevor, one that says, Trevor, sir, is looking awesome. Okay. Thank you, Farhan Habib, for that comment.
Is it you like my jacket? Yes. No, thank you. Okay, you're better than my suits. I was told that the suits were not appropriate.
No worries.
Okay, let's get going. So well, it's quite a lot going on. Brexit, I mean, it's second by second evolving there. What a day we've had on the markets today as a result of that. But let's go through things from top to bottom in our normal order. We'll start with the dollar and the currencies. The euro. Let me go to a weekly chart first. So here every bar is a week, and this is the technical pattern that we're working out of. We had an impulse move, a pullback, and a consolidation here, a horizontal consolidation here. It made its big break, and then we've powered ahead from there as we thought it would do. The weekly MACD 12, 26, and 9 weeks has been pointing up, actually very nicely with the breakout, and the RSI is still pointing up. And I know it's at a higher level, but it hasn't turned down yet. It hasn't crossed the upper line. This means that the momentum is still positive and growing. So on a weekly basis, we're at what really should be the beginning of a move. I've done a Fibonacci extension count. I've taken this leg here. I think it's a relatively easy one for us. Starting here, A, then to B here, then to C here. Then I've added the length of AB onto C to take us right up to 129.90. Let's call it 130. So the implication from the incredible power of this move here, and then the very weak reaction, is that the next leg should be strong and therefore taking us back up to this level of 130. I just want to show you that in context. We don't normally look at monthly charts, but each bar here is a month. And what would 130 be? It would be right up here 125 actually is the high in 2018. So that will take us through the high there of 2018 if we get it. And let's just analyze this chart. I know it's not our horizon, but we got higher lows in the RSI here. We've got a positive MACD here. So the monthly chart is extremely bullish. But back to the daily, we have broken out. We've had a little bit of a pullback here, not much of a pullback, and it seems to be steadying up once again. This will be quite awkward for the ECB if they're trying to plan the recovery of Europe, because the last thing they want is a strong euro. But often, as is often the case in the markets, the last thing you want is what you actually get. Now moving to sterling, to cable. Let's look at the weekly chart firstly. So what's dominating here is this line. I've drawn it here at 133, but we probed it several times. It probably should be higher, and we probed it again recently in the last couple of weeks, and then come back, and then today has been a very, very strange day. So this is a crucial level. This is, well, you know, everything about sterling is at a crucial level. But interestingly, we're doing this right at the high here. I mean, way off the 120, 115 lows here. So there is some optimism built into it. I do think the market is expecting a break to the upside. If that does happen, well, that will release a lot of energy. And again, I suppose the best way to show this is in this weekly chart here, the monthly chart here. So what is this looking like? Low, lower low, lower low, and then higher low, shoulder, head, shoulder. And this could give us a swing objective right up. I mean, I hesitate to say this, to utter these words, but up to 150. But don't forget, we were up at 150 in 2016, so it's not so extraordinary. There is, of course, resistance from the 2018 high, which was at 143 there on the way. But look at that horizontal line. Look at the significance of the 133 level. It looks as though it's testing it. If it fails, well, then we'll continue with that consolidation. It won't be a reverse head and shoulders. It'll be just a continued consolidation. But it, yeah, it looks more up than down. Looking at the RSI on the daily chart, it was declining. Still, even with this big sell-off from the high of this morning, if we close here, we will still be breaking that downtrend line there. And we've got a ADX, which is still indicating there's a trend, and the trend is up. So technically, forgetting all the emotion of being sitting here in London, it's a potentially extremely bullish looking chart. So maybe we can clutch disaster from the jaws of triumph, which we so often do.
Trevor, we actually have a question on based on the pound, actually, from a Gregory Amos. Thank you very much for your question. His question is, what's the forecast for a weak dollar against a weak pound?
Well, my forecast would be that they would both go down, but that's probably not what he meant.
No.
I think in actual fact, that's not going to be the case, actually. I do forecast a weak dollar. I think the dollar weakness is going to dominate really 2021. It's a resumption of a more natural state for the dollar. We've had last couple of years of steady dollar, but long-term, multi-decade, the dollar is weak. I'll show you a way of saying that. You can't trade this. This is a basket of currencies against the dollar. So just forget from the point of view of trading it. But it's called the symbol for it is the DXY. Let me show you the last 20 years of this to get this in context. So actually, I want more of this than that. This is going back to when the dollar index was actually the EQ. But look at this. So since 1985, the dollar was up here, high, lower high, lower high, lower high. So what are we doing here? You know, these are impulse moves in the direction of the trend, impulse move, and potentially impulse move. These are reaction moves. These periods. I know it's a long time from 1995 to 2001 are against the trend. So too was the move from 2012, where it went up and then held steady. But it does look as though it's turning down now. Look at these bearish divergences on the monthly chart. It's turned down now. I think we're in a new regime, which is a weaker dollar. The most significant, let me just go to this weekly chart now. The dollar index, you know, just forget, you can't trade this. You have to trade with the best currencies that you can to capitalize on and leverage it. But look at this here. We had this consolidation here. We had the move down. This is here on a weekly chart, and we've broken down from it. Where are we likely to go? Once again, I've used Fibonacci to project A, B, taken the length of AB, subtracted it from C, and then that gives us a level right down at 83.5. 83.5 would take us down to here, through this significant low here, and punching into this almost 10 years of support here. So I think this is very likely, and it's going to be very dominant. The pound is not weak, you know. Don't suggest it is weak. It's holding up quite well. Look at it against the euro, for example. It's been flat in recent months, and on a weekly basis, it's been flat. So it's holding up. Surprising, I must say. I would have said, if you'd asked me a year ago, if we were approaching Brexit by a matter of days, by default having a hard Brexit, what would be the price of sterling? I'd have said 120 or lower, maybe 105, back to the all-time low. But no, we're not at that at all. We're at 133, and so that's quite astonishing. It's not weak, actually. The Swiss franc has been a good trade to capitalize on the weakness of the dollar up till now, and we have broken this level of 90 cents, which was so important for the Swiss National Bank, and they were supporting it to give us an orderly control of the strength of the Swiss franc. But they've allowed it to go now, and it does look as though it'll go further. But the big question is, how much further will it go? Well, once again, we have to look at these extraordinary monthly charts to see that. So I've got these two levels here. Let me zoom in a little bit on this now. So I've taken this one off this consolidation and that low. Then here we've got the low of 2014. Don't forget, it's a monthly chart. That's now, I think, our immediate target, which is 87. But I mentioned there in passing 83, which is taking this length, that pullback, and then that length there. I think without intervention from the SNB, this will go, will strengthen substantially. But we know the SNB is Swiss National Bank is very, very active in the market, and therefore we can expect intervention, particularly if it becomes disorderly. I'd like to look at the euro yen as the way of looking at the yen, because we've had quite a really decent breakout here. I think, again, this is the weekly chart. I know you probably don't trade off weekly charts, but this is the context we're in. We had this big move up, strengthen the euro versus the yen. Then I think we had a flag, and then I think we're moving up out of the flag, and we should move the length of the flagpole. The weekly MACD 12.26 and 9 weeks is positive. The RSI is still pointing up. It's high, but it's still pointing up. So I think this is good. Of course, we've got some resistance at the high, but I don't think it's substantial. If we go to the daily chart of this now, here's that previous high. We're consolidating at the high, quite natural for it to do that. But the MACD is still positive. The trend is still strongly up, as we see from the ADX here. We've still got the rising pattern of lows. I think this one is going to go much further. What that's really saying is that the Japanese yen really just marks with the US dollar, is in high correlation with the US dollar. The two I really like as your best leveraged way of participating in weakness of the dollar, if you agree with me there, is the Canadian dollar and the Australian dollar, the two commodity currencies there. The problem with the South African rand and the Mexican peso, which have been the best game in town, if you wanted to get something which is moving and strengthening against the dollar. Here is the rand. I'll again look at this at on a weekly chart to show you. But the problem is, it's coming down to a really massive amount of support here, and we're actually at it now. I know the technicals are still bearish on it. The RSI is still coming down. The weekly MACD is negative and not narrowing at all as yet. So no sign of this coming into an end, but it is meeting a floor of support. And this is even clearer in the Mexican peso, which has been the other great game for participating in dollar weakness. So here it's come down, but look at this here, this, substantial, wall of support, year wall of support. So I don't want to sell something that is just is heading into such a wall of support. I want some blue sky. So where do I see blue sky? I see blue sky in the Canadian dollar. So here's the Canadian dollar on the weekly chart. This support zone here, I made it a zone before this breakout here. The reason was I wasn't really sure where to draw this line. We had a couple of lows at this level, a couple of lows at this level here. So where was really the support? It's really a zone, not a thin line. But this bar was convincing that we'd made the break. We had got the series of lows, highs, which told us that it was bearish. The RSI is still coming down. The weekly MACD is still coming down. So what's the daily looking like? It's very negative. The ADX is going up. The trend is strengthening. We've got a wee bit of a bullish divergence here, showing us that we may pause a little bit here, but the daily MACD, as you would expect, hasn't crossed up or anything like that at the moment. But this, I think, has got a long way to run. And again, let me look at show you this on the monthly chart. What could be the potential for the Canadian dollar? If I think it's really right back down to here to 124 down to 120 level here that we're headed ultimately for that. So my other one is the Australian dollar. The Australian dollar, now this is of course quoted the other way up, so it's strengthening substantially. Here's the ADX trend strengthening. These moving averages, that's the 20, that's the 50, that's the 200, they're all sprayed out in the right direction, are all climbing, so that's a strengthening trend. The RSI, yes, it's at a very high reading, but not pointing down. It's not even crossed down through the 65% level, but it's still not even pointing down. The RSI is pointing up there. Here's what we're looking at. We had this triangle here, and I talked about this, then we broke out of it, and we've blasted away from it. I'm measuring from A to B, and that's a very long AB. The BC is minuscule. So when the bears had their chance, they achieved virtually nothing. This means the underlying technicals of this is extremely bullish. The MACD is positive, of course. The RSI is still going up on the weekly. And if I do the count, A, B, the length of AB, then add it to C here, that takes us up to, oh my goodness, right up to 86. 86, where is that? Well, we have to look to the monthly chart to see where 86 is, but it's up in here. But I think in truth, there'll be substantial resistance at 81-ish there. But it's a very bullish looking chart there. Also breaking long-term downtrends. If you're drawn across these highs here, that's also been broken. I haven't got that line on there. So my two favorites are the Australian dollar and the Canadian dollar. They were the South African rand and the Mexican peso, but I also love the euro. Okay, Bitcoin, last of the currencies here now. Well, we're on the monthly chart here, and this is a great chart to show us the big picture. We're hesitating at the 2019 December high. The MACD here, very positive and widening. The RSI rising here with rising lows. That's a bullish pattern. Let's go down to the weekly chart. We have powered ahead here, and it still looks good. We have got some black candles here, so there is some descent, but overall the MACD is still going up above its signal line and widening, so there's power in the trend. The RSI is easing back because let's say it got a bit excessive, but the context is really this high here. We're testing the high, and it's not surprising that this being the same, more or less the same as the all-time high, that we spend some time consolidating. Also, a lot of people have made a lot of money in Bitcoin this year again, and so lots of people want to show up by turning up with their parents' house with a brand new BMW or Mercedes, and so they'll be cashing in a little bit to buy that car and get it delivered before Christmas. So that's what's going on here, but I don't think structurally the market has changed at all. I think it's still looking extremely good. This is a fantastic market from a technical point of view. I work with traders, institutional traders in banks and hedge funds and investment managers, and I teach them technical analysis, and I have to resist going to Bitcoin for my examples of beautiful chart patterns working, head and shoulders, triangles, trend line breakouts, beautiful charting going on. Time and time again, we come back to what was any chartist would have known the previous high. Hesitation at the previous high is absolutely to be expected. But what are we getting? The tiniest of all possible hesitations. That's very, very bullish. We had a powerful run up here. We're hesitating slightly, but if I do the Fibonacci projection, eventually A, B, C, the D will be very high for this. I think we'll have, once the high is properly taken out, which will probably be like on the January the 3rd, then we will power ahead terrifically into the blue sky of it. It's a great market. Reason it charts so well and behaves so well technically is, of course, it's got no fundamentals to spoil the technical picture. It's totally driven by fear and greed, those two emotions. Therefore, it behaves by the rules of technical analysis better than any market, I think.
Trevor, we have a question.
Yes, please.
It's quite an interesting one. He says the question is, can you show the NASDAQ monthly chart pattern and compare with Bitcoin monthly chart? He seems to think that the same movements are taking place.
I certainly can, and it'll just take me a moment to do it, but I'm pleased to do it. But all you're saying, with all due respect, is that you got two bull markets.
Mm-hmm.
That doesn't mean causality. It doesn't mean one causes the other. Actually, beware of that. I see a lot of chart overlays where say this is, how many times have we seen while the S&P was going up and it had a slight wobble, and then somebody overlaid the topping pattern in 1929 and then said this is how it all started, and then next thing we're the Dow's another thousands of points higher. This overlaying of patterns, I think, is really a very dangerous thing to do. If you were asked me to overlay the pattern of the Nasdaq in 1999, I think that'd be much more appropriate, because in 1999 the Nasdaq was in a bubble, and I think also that the Bitcoin is in a bubble. But the thing about bubbles is that they can really go, and you know, there's no point saying, "Oh, I'm not buying this because it's in a bubble." Why not? Bubbles are great, actually, and we like bubbles, and they can really, really go. So I think there's much more, you know, really reason to say that it's like 1999 than it is like now, because all you're saying is that that's a bull market and there's another bull market and they're both going up, unless I'm missing a point. So please, if I've been dismissive unfairly, you know, tell me why. But you will find that, of course, two bull markets. You could do soybeans and Bitcoin. I mean, soybeans is parabolic. Soybeans is more exciting than Bitcoin. So you know, but you know, there we are. So okay, but please come back to me, Dan, if the person comes back and thinks that I've been too unfair about that.
Okay.
But I'm going to look at the S&P right now, and so here we got the S&P. It's certainly strong. Here's the weekly of it to show that we broke the previous high there. A little bit of a terrible, you know, terrible in the sense of I bought here and then got stopped out here, type of thing. But it messed around for a bit, but now it's broken away finally and joined the Nasdaq, which were and falling behind. But now it's taking a lead, and much more of the old economy stocks are coming up. So the airlines, the old oil, Exxon, Chevron, are pulling the index up. General Electric, Ford, these old, you know, God, uncool as can be things are pulling up. And actually all the cool things, like Apple, for example, are looking pretty looking pretty soggy here. And if I go through all the list of the FANG stocks, you'll see that they all look very soggy indeed. So that we've got this expansion of breadth. Instead of the S&P being driven up by only 5 stocks, as it has been for such a long time, so alarming that it didn't really matter what the 495 others did. Everything was driven by those 5. Now that's not the case, in that there's bullishness, you know, much more broadly, and that's actually a very strong condition. So I think the S&P is strong and will go higher, and is, you know, is going to continue to go higher. We have got a bearish divergence in here. It may hesitate a bit, but I think it will go higher. The FTSE is strong, and the FTSE is playing with this high here, which I think it's breaking. So this is the March low, and then we rallied. I think this is a flag. I've done the measurement this way: A, B, add to C. That takes us up to 7,100. 7,100 would take us into this area, which I put inside this ellipse here. Yeah, massive consolidation that occurred more or less the whole of 2019. We traded in a very narrow range, but when we dropped out, it plummeted. And so this is frictionless for the market. I think the move up here could be very strong indeed. Now, what could cause it is weakness in sterling, for sure. The FTSE will benefit from that. Weak sterling is very good, particularly for the FTSE. The FTSE is an unusual index in that it's got so many dollar-earning companies in it. Mining companies and banks and so forth are the big. It's got virtually no technology stocks in it. It's an unusual index. It's not really a representation of Britain at all. It's got Kazakhstan mining stock in it. It's got 2 hedge funds in it. You know, it's not really UK PLC, but it's very, very sensitive to sterling. Weak sterling is very positive for it. We've just broken out of we had broken out of that flag. We're now broken the high, which is a resistance. To me, it should be frictionless up to here, no matter what happens with Brexit. Can't be said the same from Germany. Germany's a drag on Europe technically. We've got these two unusual weekly gaps. This one has been filled but rejected a number of times. It really looks quite soggy, this chart. If you look at the charts of Spain, Italy, France, these look a lot better. But the best one of all, without doubt, is the Nikkei 225. Now, when we broke this level here, that was tremendous, and we gapped higher and we powered ahead ever since on the weekly. But let's see what that level is. This is a long-term chart. Maybe if you don't look beyond your own narrow vision, you wouldn't really see this. But what was the importance of this? 1, 2, 3, at least 3 tops at 24,000, and we've powered out. And if we look at that in context of let's say 20 years, we are going back now. Sorry, messed up there. Don't know what happened. There we go. And what I want to do is this. Look at that. So those were those tops. That was that break that we just had. And then now this we're in an area where we just tumbled really fast, going back to 1990. So we have to look back 30 years nearly for resistance levels. And I think this is a very significant level, and we're going to break out, and we've got a lot more on the upside for this one. And you know, the lost decades for Japan may well indeed be over. We're only getting to gold now, but let's talk about gold. Here's gold, the weekly chart. I'm afraid I'm not happy with gold at all. We had this descending triangle here at $2,000, previous a round number, a significant round number. We broke down on this week here, then we rallied, but this looks to me, I must say, like a dead cat bounce attempt. Look at that shadow there, and this bar, this current week being weak, I know we're only starting it, is quite bearish for it. The indicators in the weekly, of course, are negative. Let's go to the daily now. And so this is the rally to the break point here. That was the descending triangle, and it's looking to me rather negative, in which case the descending triangle will fill its promise, and we will go down. So there's a big threat in this, I think. Gold could be in serious problem. A thing I'd like to show you here is gold versus the S&P. So is it better to be in gold than be in the S&P? And this is a very long-term chart of that. From 2006 through to 2011, gold massively outperformed the stock market. Then during the great bull run that we've had in the US stock market, this is the US stock market, gold has underperformed. And then in recent memory, and perhaps embedded in your own memory, gold has been quite good versus the stock market, outperforming the stock market. But we've got, as a chart, it's a very interesting pattern here. We've got a low, a higher low, then a higher low, and then we're right on it again. So what is going to happen here? Are we going to break down, in which case that's a continuation of a long-term underperformance of gold versus stocks, or are we going to bounce yet again and gold will come back? I think the threat is, from the shorter term chart that we've just been looking at, that it might be that that we're not that gold is really going to start to underperform again versus the stock market. Now, next one is crude oil. I'm sorry to overrun here.
Don't you worry, Trevor, we've got time. We'll have to get through to the end. It's better to cover everything.
Okay, all right then, thank you very much. So let's look at the weekly chart firstly. Crude had this, you know, not quite a flag because it was overextended on the downside, but this pause after making the low and then rallying, pulling back, and I'm doing all the measuring here to here, here to here. But what I do notice, and we broke the $44 level, and that left us clear for $50, which must be a magnet for crude oil. We've got a series of lows at $50. It's a big round number, very significant level, but I think it's being sucked up to there, and it will be sucked up to there. On the daily chart here we're moving up. We have got a bearish divergence, and it's slowed up quite a bit in its advance of that we had in November, but it's I think that it's just a natural slowing up in a rising market, and that it will regain its footing and push on and ultimately get to that $50 level where there is substantial resistance. Okay, so now moving to stocks. Well, stocks have been moving up generally. All the things that we've talked about in the past have worked out well. We've got outperformance from the banks and the mining stocks that we've recommended. But I've got a bit of a controversial one here, which is Facebook. And now, Facebook being one of this group of the FANG stocks, it's the F of FANGs. So we've got this triangle pattern here on the daily chart. Let's get the context of that triangle on the weekly chart. So here we've gone up and we've got this lower highs pattern here and higher lows, more or less symmetrical triangle. So remembering my Edwards and McGee education, this we can't really guess which way this is going to break out. The weekly MACD is negative, the RSI is neutral, but let's go to the daily chart. This is what I see as a big threat. I think that well, the MACD is negative here, the RSI is coming down here, and we are threatening the lower line. Now, I'm not going to say it definitely is going to break, but I do think that we are now 1, 2, 3, 4, 5th time we're approaching the apex. It's very typical that this type of triangle breaks out about 2/3 of the way through. That's round about now, and we're at the lower end of it here now. My bias should be that it will break to the upside because it's in an existing strong uptrend, but it's really testing the bottom here. Now, I don't know, in next week when we next talk, or next time we talk, we may be through this, or we may have bounced and be testing the top end of it, but it's got to do one of those two things. Otherwise, we may break. And this is what I want to suggest to you, that some of the other FANG stocks are in the same boat here, looking quite iffy and quite toppy. If they break down, how far might we go? Now, classically, we measure the width of the triangle. The way I measure it is from the first swing from the high to the low to the high. I take that width there. Now, I happen to know that is 550 points. So let's go down here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That takes us down to around 220. And if we go to the weekly chart, let's see where 220 is. That's round here. I think that actually it will meet some support before 220, but 220 is the old high here. So in our pattern, our journey higher, this was the resistance point, which gave us the March sell-off. And that was a strong resistance point. So I think it would be a strong enough point to stop any fall here if we hadn't already stopped and then later on resumed the trend. But I think this is quite an iffy looking chart and potentially could start a tumble in the whole group. It's just one of the whole group with all of them with charts like this. But my caveat is it hasn't broken yet. So don't say, oh, you said it was going to go down. I said it was going to go down if it broke, let's say 270, 268, something like that. It hasn't done it yet. and it may not do it. It may now go up to the upper side of it, resistance side of it, and break out the upside. But if it does, I just want to warn you, since we're right on it, this could happen, and that could be the implication for it, and that could be quite hurtful to quite a lot of people. Thank you very much, Dan.
No worries. Thank you very much, Trevor. Went over by 10 minutes today, but we covered everything nicely, I think.
Well, I do apologize for everybody for doing that. We do promise half an hour, and it's indulgent.
Yeah, we can do. We can go over, no problem. Okay, well, thank you very much, Trevor. Just to let everybody know, no more webinars this year. This is the last one of 2020, but we hope to see you all again on the 4th of January 2021, bright and early. We're starting at 9 a.m. London time. So we hope to see you all at 9 a.m. London time. I think that's 1 p.m. Dubai, 8 p.m. Sydney, I think, and Singapore at 6 p.m. I'm not sure. What time is it in Singapore? I think it's about 2 hours before Sydney, isn't it, Trevor? It's approximately.
I think it might be more, but Sydney's the same as Singapore.
Sydney's the same as Singapore?
Yeah, it's nearer Singapore. Sorry, Perth. Sorry, what was I talking about? Perth is
oh,
so, no, not at all. Forget all that. Sorry, I went gaga for a moment.
Okay, no worries. But anyway, so 9 a.m. London time, 4th of January, everybody, and we'll hope to see you there. Have you got anything to add, Trevor?
Yes, I have. I think by 4th of January, when I'm talking about this triangle, we will know which way it broke out. Brexit, we'll know which way it broke out. We'll know a lot more by the 4th of January. But you know, I suppose what the market is telling us that there's a lot of tension, but we know that too. But watch this one. You know, these FANG stocks are really extended, and so the potential for a correction is quite big, and that I think would be quite unexpected if it happens. But thank you very much indeed, everybody, and love the questions. Thanks for those people that did ask the questions, and thanks, Dan, for looking after us so well, and may the trend be with you.
Thank you very much, Trevor. See everybody next year. Thank you. Bye-bye now.
Thanks, Dan. Bye-bye.
Bye-bye. Bye-bye.
Bye.